My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to save you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. After a down day, where the Dow declined 208 points, S&P lost 1.1%, and the Nasdaq tumbled 1.68%. Why don't we use this moment to assess what's happened so far in 2023? Right now, there are two major camps on Wall Street. You've got the bears, who believe the rally is over and done with. And then you got the other bears who don't want to acknowledge that the rally even happened. Where the heck are the bulls? Where are those who believe that companies can change their stripes and improve, as Disney did this very night when CEO Bob Iger, I should say new CEO Bob Iger, announced a giant restructuring, seeking $5.5 billion in savings, helped in part by the layoffs of 7,000 people. That and the prospect of the return of the dividend sent the stock flying 8.8% in aftermarket trading. Bye. The bears act as if every company is hostage to the Fed. Everyone! They seem to pay no attention to the positives like Disney's changes, or even admitted that's difficult for the company, but positives like Dan Loeb joining three other activists and taking position in Salesforce. For activists, that often bodes very positive for you, the shareholder. I think the growling bears may be in denial here, not just about the stocks of Disney and Salesforce. As I see it, this year's tremendous action is all about a snapback after a horrendous 2022. And in some cases, an actual improvement in business. Not all, but some. Sure, retail's very tough. Too much inventory. Yes, high rates have hurt consumers, but they're still spending. Not on things, but on travel and leisure. But you know what? We don't need to quibble. I got an idea. Let's get some hard evidence. Hard evidence on what is soaring in 2023. Let's go to the tape. And let's look at the stocks that have gone up the most in 2023 to search for clues about what's really happening and then maybe what's about to happen. First, and this one's so obvious it's just painful, Tesla. It does prove my point. This is a stock that sold off hard last year, down 65%. It's now rebounded like crazy in 2023, up 63%. No, that doesn't bring it back to even. I understand arithmetic, but it's because Tesla's fundamentals were never bad. The stock just flew too close to the sun. It's been hard to value this company ever since it went cash flow positive years ago. However, we know it got too low, in part because Elon Musk was forced to sell a ton of stock in order to pay for his ill-advised acquisition of Twitter. A deal he would have backed out of. Delaware Chancery Court wouldn't have let him. That unnatural pressure weighed on the stock of Tesla. When Musk finally said he was done selling after he bombed the stock with a $3.6 billion sale at the end of December, well, it was off to the races for one of the great stocks of all time. Second biggest winner is a company called Align Technology. That's to make Invisalign braces. They had a terrible year in 2022, down 67%. Business was rocky, especially for such a high multiple stock. But things turned around in the fourth quarter. You know this because on the latest conference call, the analysts were congratulating Align for its return to stability. That's been enough to turn the third worst performer last year into pure gold for 2023. It's up over 58% year to date. How about this one, Catalent? That was the sixth worst performer last year. It came into 2023 with a terrible post-COVID hangover. These are guys make the tools that helped Moderna create its COVID vaccine. So just like Moderna, the stock roared during the pandemic, then came back to earth once the world went back to normal. Now, though, it's on fire because we're hearing rumors that it could be a takeover target for Cramer fave Danaher, which we own for the charitable trust, although that stock's been under pressure of late. I have no idea if a deal will happen. But I think it would make a ton of sense and shows that the 2022 sell-off created values in 2023, values that perhaps you should be interested in taking and not giving them the Heisman like so many of the bears have. Next, people hated Warner Brothers Discovery last year because it was saddled with $50 billion in debt and a big slug of puzzled shareholders who ended up owning the stock when it was spun off by AT&T. You know, part of it went away and they gave it to Disney's these people who wanted a dividend. Who knew? I mean, that's how you get to be the 11th worst performer in the S&P 500, down more than 60%. But it's also how you get to be the fourth best performer of 2023 because the stock got too cheap. The AT&T shareholder base simply didn't want to own Warner Brothers Discovery for any reason, even when it became clear that the fundamentals might be turning. That depressed the share price to unnaturally low levels And now it's bouncing back. Then there's Meta Platforms, this one got sold so hard last year. Do you know that it was the 8th worst performer in the S&P 500, off 64%? At the end of last year, the stock was selling for less than 15 times earnings. So when Meta laid off 13% of its staff and reported an encouraging quarter, where management spent a lot more time talking about Instagram and Reels than the bottomless money pit that is the metaverse, well, the stock soared. It was a surprisingly good quarter, and the $40 billion buyback didn't hurt much, did it? I think Meta deserves to be the 5th best performing stock for 2023. It is now up 52%. The stock rolled over today, devoid of any major AI announcement like Google or Microsoft. But I tell you what, I do a lot of reporting on this. I think there could be something AI meaningful right down the pike. 6th best, we got another one that soared too close to the sun. That was Cramer fave, NVIDIA. This thing fell off a cliff last year in part because of a slowdown in the video game business. This year, that ugly duckling turned into an artificial intelligence swan, as these AI chat programs most likely run on NVIDIA's technology. Now, it's up 52% for 2023, and I'm concerned that you haven't seen any big money for all of its work. I think it's coming, which is why we've been telling Investment Club members, hold on. Now let's knock off 3 birds with 1 stone. The 7th, 8th, and 10th best performers in the S&P are all cruise lines: Royal Caribbean, Carnival, Norwegian. These stocks were horrendous performers during COVID, which makes sense because they were often allowed to operate for a very long period of time. They weren't allowed to operate. They were shut down. How are you going to make money when you're shut down? Now they're bouncing back, and the wave season, when we find out how bookings are doing, has been a blockbuster. Hey, you know what? They do better when they can sail. Exciting time for the cruise industry. All these stocks are coming back thanks to what I call the life is too short thesis. People want vacations immediately. They don't want to wait. Yes, they're not paying for things at retail, but they want to get on these cruises. And when it comes to vacations, cruises, by the way, are the best value, especially if you like to imbibe. The 9th best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yes, some of them come back here with the stock directly reflects an oversold position. Stock was the 4th worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw in Warner Bros. Discovery or Tesla. That's important because today was one of the worst days since the year began. After these stocks were big participants in the decline, I understand that. Many of the bounces this year have come from stocks that were heavily shorted. Many of them were correctly beaten down. It's just that the declines got a little too excessive when nothing really bad happened, at least by the end of last year. But when you look at the top 10 biggest winners for 2023, they're not like that. For the most part, I'd steer clear of the heavily shorted rebound names. And here, I'm not going to climb on board the Carvana bus or the upstart train. The fundamentals, they're just too ugly. The 10 biggest winners of the year so far, though, bottom line, consider me intrigued. But only if we have a couple more down days like today that give you a better buying opportunity, because these stocks have all been overbought. One that I'm sure the bears are going to create when they go on TV tomorrow and tell you it's the end of the world, as they have throughout this entire very good 2023. Joshua in Louisiana. Joshua.
What's up, Jim Cramer?
I'm just doing my thing. How about you, Josh?
A big booyah from the great state of Louisiana.
Well, I do love Louisiana. I love New Orleans. What's happening? Grand Isle, too, by the way. What's going on?
What's your thoughts on Intuit?
You know, Intuit is a great long-term company. They have helped small business more than any company on earth. Right now, people worry about the near term. How about the longer term? They're worried about the chart, which is a head and shoulders pattern. I say Intuit is a great company because it makes it so life isn't too difficult if you own a small business, and you don't need all those accountant fees. Ron in Ohio. Ron.
Hi, Jim.
Right.
First, I'd just like to say, Jim, I've been following you ever since Louis Rukeyser passed away. It's been a long time.
Holy cow, man. I told him he was my idol. We were fortunate to work together in the same building, and I never missed a show. Never missed a show.
That's great.
How can I help?
Jim, my question is, President Trump filled the federal oil reserves at a cost of about $45 a barrel. Biden has removed about 3/4 of that, and now he has to replace it with oil at 75, 80, or whatever dollars a barrel. This is a very large purchase. When this purchase is made, who benefits from it, and how can I benefit from it?
Well, I think that it's really, the oil was sold at a very high level. We know that the president's not buying it back very aggressively. So I don't want to say that it doesn't matter, but it is not figured into play. What we need, if you get more economic growth worldwide, you're going to have more use for oil. That's all that it will take. The supply side itself is not as important as the demand side. And I think that when it gets to 70, it does seem like we have a floor on it. I urge you to buy an oil stock or two. I think they're terrific. All right, consider me intrigued when it comes to these top 10 performers. But they got to come down a little, okay? But really, let's say 2 or 3 more days. On Mad Money tonight, despite reporting a top and bottom line beat, AGCO stock remained relatively unchanged. So are investors getting a buying opportunity in the agricultural equipment company? I'm getting the latest from the CEO. Then last night, President Biden touched on our progress in the semiconductor industry, which has been greatly impacted by the work being done by none other than Secretary Gina Raimondo. And tonight, I'm learning more from the Secretary where we stand on our mission to bring more semiconductor capacity to our shores. And Mattel reported after the bell, is Wall Street ready to deal with what I think was a disappointing quarter? Why don't we talk to the top brass and find out? So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.